Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, August the 5th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Destination 1 was complete when we went up to 114.72. We are in the process of breaking down. The question is this wave 2 over and we're ready to go breaking out, or we're going to continue with a further downtrend like we're denoting here? Destination 2's down about 80. So I don't think this is finished. I think we are going to go lower. Several reasons why we believe this is probably not likely to go breaking out now. Well, price has to prove a lot before we start to say, yep, in fact, this is over and we are going to go breaking out. But please keep in mind, at some point, whether it's here, further down, or where our original destination mark from 3 years ago is, we still think there's more downside. But at some point when wave 2 is over, what's going to happen? Dollar index is going to go breaking out above this 114.72 and what we believe is going to be a wave 3. Let's jump into the charting platform, and we could see several reasons. We talked about this last week, that as we bounce, we got a beautiful 618-786 retracement, and this did not look three waves. This looked like the beginning of an A, and then we got our B, and now the C went up to this 99.70, almost reached the 1448. And we went in great discussion that when you see this type of move, this is an equal type of move going to the one. In this case is a three-wave 3.2. This one right there, the Fibonacci base fib extension. So you go from the low to the higher low, and an equal move like this represents from this low to that high. You get another one of those equal types of moves, and we're supposed to go toward this black line. We went just a little bit higher, but that's typical in a three-wave correction, and then we should see more downside. Well, I went in greater detail stating if this was going to be a 1, 2, 3, 4, 5 and start an impulsive climb out, then you typically go at least toward the 1618. If the rally dies somewhere around this 1/1448, 1272 area, typically your wave 3s go at least to a 1618. So this looks more like an ABC correction. And if that holds, then we should see some more downside making new lows. So that is the plan. Now, admittedly, from the recent low to the high, we haven't taken out the 618-786 zone. So I would keep an eye on this area right here, the 618-786, this zone right here. I'd keep an eye on it. As the price declines and starts breaking below that, then we have a 75% chance we go and visit the 1448 at 96.60, and a 70 plus we go to 96.25, which would mean we make a new swing point low. And from this bigger degree low to high, we start breaking below that 618-786, then it sets the tone for this 95.86, 95.30 area, and we'd expect more downside. So up and until price proves otherwise, we believe this is going to make a lower high, lower low, as this three-wave correction should be over, and we should start to see the beginning of a big push lower. Now, is this the beginning of a wave 1, 2, then we get a big push 3, 4, 5 to complete this lower low? Well, up and until price proves otherwise, you're below the Magic Fibo, that is bearish. We had a three-wave move up, that is still bearish. So all roads are still leading to more downside. So be careful on these bounces. Last week I told you I would not be interested in buying the dollar index at this point. Look for a possible reversal. We got a beautiful reversal last week on Friday, and we're just chopping now. So this does not look extremely bullish, other than the fact from this low to high, we're still holding that initial support zone. But once we start to close below this 97 area, not only takes the 618786 out of the smaller move, but it's the same 9618786 on the larger move, still around this 97. So if price drops another point and a half ish, get us below in the low 97, then I think it's over. We'll look for a new swing point low. Fair enough? And then we also talked about what that meant, that you have an opportunity to buy the euro on a bounce. I did say even prior to setting this up to buy that bounce was to be, once you get the bounce, let's be in a position of authority. Well, look at that big candle on Friday. We had a low of 1391 and we went up to a high of 1597, 200-point move. So this is when you're in a position of authority, you took profits, and if this thing continues where the dollar continues to break down, no questions asked, the euro is going to continue to break out. So you could add to that 200 plus pips. But if this continues to hold, same thing from that high to this low, we're holding the 618786 zone. So up and until we break a little bit higher, then we could start focusing on this 118.80, 119.40, maybe 120.80. But we still got to prove it. This is a big start, the bounce, but can we hold it? Or is this a bigger degree combination correction where you get an A, B, C correction, and then you get a W, X, Y, and it extends a little further? So yes, this played out beautifully like we talked about, buying that daily PAI hook on the software, and beautifully enough on the euro, we'll go to the daily. We got the PAI hook, we got the cross, we got exactly what we needed. We got a little trigger that entered the trade, made you 200 pips. Pound dollar, same thing. We got the trigger, went about 200 pips, and we'll double check that one in a second. But that's why we talked about setting a trade management system to buy this in advance. Well, I had to open up a new demo account, so it's not actively running on this account. It was running on my older account that expired, but that's the deal with demos, and they expire from time to time. But needless to say, in my live account, I took advantage of that, and the move is expected to continue, but I'm in a position of authority. So back over here to the charting platform, just like the euro popped, the pound popped. And again, from the swing point low was 131.41, 1.3141, and we went up to a high so far of 133.31. So basically that 200 pip zone, and then now we're just kind of chopping and holding. But I told you as this was going to turn and hook to buy that, but get into a position of authority. What does position of authority mean? That means you should be at a break even plus one, so that if this thing reverses, you get pipped out for some profit. Or in the case where you pop 200 pips, I took a profit, so I'm in a position of authority, plus I bank some. And if this continues, we'll continue to make more money. If not, we'll get pipped out for more profit anyway. So I'm watching this little zone. I think this little support zone is likely to hold, and then we're likely to see more upside. Bottom line, if the dollar index continues to break down, and I don't mean off of this bounce, I mean we fizzle and get a lower high, lower low, and this continuation continues to unfold, because again, after a three-wave move, you typically start with a five-wave down to make some new lows. And we've been in a downtrend since about 3 years ago from that 114.72. We've been in a downtrend. Now we're correcting. We're still below the Magic Fibo. That's bearish. We just completed a three-wave move. That's bearish. And the dimensions of this three-wave move make up a perfect ABC. So far, this was the perfect little A move. And we broke this down over the last several classes, obviously, but this did not look three-wave, that looked five, so that had to be the A. Then we got a beautiful retracement to 618786 zone. And if you were in that class into the middle of the week, I talked about this bounce coming down into the zone, and I said highest of highest probability, we're going to get this to bounce and go on up to this target zone, this big pink box. And that was a great call there, because that was the end of the B wave. And sure enough, we reversed and went right smack into the target zone. And then I said, don't buy here, look for this to reverse. And I actually entered a short trade on the dollar index, and what a beautiful move on Friday. So what do we need to see for continuation lower? We need to see this rally fizzle and then continue to break this 98.20, 97.50 area, 97.80 area. So basically just need to break down below this green box to set the tone for more downside. And as we start breaking below this green box, then it sets the tone. We're going to go on and make new lows below that 96.40 area. Got it? So ABC correction. Now we're looking for more downside. Amen? All righty then. Let's continue. So I'm going to close on this. As long as price continues to make lower highs, lower lows, and once we take out the green box, you can expect this 96.60 as a high probability target, followed by 96.25. Then you take the prior swing point low here from July, and then you go up to the swing point high. That's that same green box, 618786 zone. So once that's over, notice from this low to that high, your 618786 zone. And then from this low to that high, 618786 is this box. So this is what I'm saying. We started closing below this box. It says we're going down here, which would then close below that one, which says we're going where? 95.86, 95.30 area. That's where we talk about a new swing point low. So in closing, my humble opinion, this will not go breaking out. This will break down. But if you're more conservative, I'm already in a position of authority after what we discussed and sitting here. So even if this does break out, then it'll pip out for more profit. Otherwise, once we start to see this break below this 97 area, then consider expecting more downside. Got it? And then that translates to the euro and the pound in the same breath, that as long as this resistance zone holds, what's the resistance zone? Well, we have this high to that low. We got the 618786 zone up here. Let me get that big red arrow out of the way. We got the zone up here, 618786. And then from this high to that low, we have the 618786 zone kind of overlapping. And this is why, yes, we're up 200 pips and we're kind of chopping in the zone now. But once we break above this box, this 116.70, 117.40, this pink box, then we basically expect us to go up to 118.80, 119.40, highest of highest probability. So the bias is this is probably the beginning of a 1, 2, 3, 4, 5 type of move to get up here. So far, so good. So I'm going to sit in my position of authority. We talked about getting in that trade days and days and days in advance. I kept saying and showing you on the chart that as this daily started to move toward oversold, we're expecting to get this into oversold territory here on the euro first. We were waiting for this daily to get oversold. We got to oversold territory, and sure enough, we said, buy that. There you made some nice pips, high probability. And even if this fizzles and makes a new low, say this would turn over, come back down, I'll buy it again when it reverses because I expect this all to be support. And we even talked about when the daily would cycle, use Ichimoku cloud. You're above the cloud, you expect the daily to cycle. When was that? 1 hour weekly gave us a hook and a cross, which was a couple of weeks back. And the daily did what? It cycled down, and we did what? Got sucked and pulled into the cloud, just like we were expecting. All right. And then the pound kind of ditto. We got the same thing. Pound was over here. I said expect this to slingshot lower so that the euro and the pound could join forces in oversold territory after its own three-wave move. And now we're looking for this bounce. We bounced so far, I would expect more upside than downside. But that's why when you buy these bounces, you get into your position of authority and you expect that this will continue higher. And if you're wrong, then you already have profits, a winning trade. And as you get pipped out, you'll just make more profits and we'll rinse and repeat to look for the next entry. Okay? All right. Let's continue. What about the markets? ES. ES and these are in some danger zone. Yes, we got the big reversal after last week we discussed, and you can see here on our chart, expect, let me update this to get to my recent class from last week on the 31st. Expect markets to correct and Bitcoin to make a new low. Let's see how that called out on Thursday and how the market's played out so far. Well, you go over here and you go back to ES, and we can see that ES going into Friday gave us a nice little move lower. So that part about expect the markets to correct was spot on. Not only did it start correcting on Thursday, see the red candle, but on Friday continued. And then yesterday we bounced, but this is a danger zone. This looks like we're going to make another swing point low over here. And let's zoom this in so you can see it. From the recent high to the low, we went right to that 618 zone and we're failing. So again, this looks like the beginning of a potential A, B, C. Whenever you see this type of move and it goes to that 618 zone, gets rejected and starts coming down, then it's a higher probability, hint, 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 the ES for those trading futures, going to go lower. That's what the technical picture says. Well, if you're much more conservative and want to prove it, then you can use your 2.2 from the recent swing point low up to this current swing point high. And once we start closing below this 62.95 and 62.70, so we're not too far from there. Once we start closing below that, right, you start coming down, we start closing below the 62.95, 62.70 zone, then we have the highest of highest probability. We're going to go towards the 1448, 62.20, 70+%. We go visit 62.08 and might overextend towards 61.60 area. So my bias on the ES today is more downside. We're getting rejected at that 618 zone, which sets up the A, B, C type of move. Right? So far, so good. Well, let's clean the slate and then look at where would this likely go. Instead of a 2.2, let's use this high, low, lower, high 3.2 to give us more specific targets of where we're likely to go. And let's see how that lines up with prior price action. From that high to this low to this lower high, this sets up the 6150 area. If we overextend, we could go down to the 6118, maybe 6080 area, which is where we last time kind of grinded into, had a little correction, a little three-wave correction, then we blasted off. So this box, I'll actually use this one since it's already there. This box fits beautifully with prior price action, that this was the former breakout zone. We tested right around these Fibos, then we pulled back. Then on the way up, we tested a couple of times before we broke out right around this 6150. So my bias is over the next few days is we're likely going to move toward the 6150 area at least. If we overextend, and this is just a three-wave move, ABC, then we should stop somewhere between the 6150 and 6089. Typically in a three-wave correction, you don't extend to the 1618 or more. So we should see it's reversed somewhere in this zone to look for a breakout. Now, if this correction was the end and we start closing above this 6380 in the 64 area, then that would give us a high probability we're going to go on and make new highs around that 6500. But I would be very cautious of this move, ladies and gentlemen, because since the low and the rally into this from Friday coming into Monday and then today, we're stopping in the tracks at a 618. That sets the tone. We're likely going to get another push lower. So my bias for ES today is more downside than upside. If this is incorrect, then I would look to go long once we clear this zone up here. And I'll change that to pink because that is resistance. So let me do that again and change the color. So this little zone here, which we're stopping in at the moment, that's why I'm more bearish than bullish. But if it's wrong and it's going to go the other way, then I would wait till it clears this hurdle and then I would go long. Highest probability we'd have another breakout. So if price can start to close above that 64-ish, 64.20, then we can start targeting 65, 65.30. If not, I think we're going to get rejected here and actually go down towards 61.50, maybe the 60.89. And if we're going to get a much bigger correction, and this is the beginning of a 1-2, then would expect this push lower to at least go to the 6,011, maybe the Magic Fibo area, and what would be a wave 3. So this is when price, you just got to figure it out. Is it an ABC or is it going to be a 1, 2, 3, 4, 5, and we get a much deeper retracement? Well, what else we got going for more downside? Seasonality for August is bearish. We had bullish seasonality for July. We talked about it going and making some new all-time highs. Well, now I've been waiting for this correction, anticipating for quite some time. We needed a much bigger correction. We need a correction. We need a correction. And that's even what we stated in the last class on last Thursday. Expect markets to correct and Bitcoin to make a new low. So where does that leave us? That leaves us with seasonality in August is bearish, so we typically get a pullback. Now that's what this chart's saying. We rallied right into the resistance zone to get rejected. That's stating more downside. And the only way I change my tune for this to go and break all-time highs again, it needs to clear the 618786 zone, basically this pink box. Then I will look to go long, shooting for 65, maybe 65.30. Otherwise, downside is the way to go. and we're looking for this thing to push, not necessarily down here 61.50 today. That's over 150 points. I don't expect to see it today. Anything's possible, but I do expect over the coming days while we're in August, start to pull back further. The question is this going to be a much bigger correction down, or we're going to get this little ABC somewhere in this zone? So I'm going to put two boxes on here overlapping each other. So this is where we should reverse if this is the ABC. We should reverse out of this box. So let me make this one green just so we can see the difference in the boxes. So Emil, James, Ian, Mr. Tucson, all of our archivers, William Bruce, the biases, we're going lower. We got a beautiful 618 retracement failing, and this looks like we're going down. We got seasonality for July, from bullish seasonality in July going into bearish in August. All markets over the last 20 plus years have given us on average a August that pulls back. So that's good things. And the technical picture says we should go lower. So all of those combined says we have a very high probability we're going to come down at least to this point. Well, it's possible that this could be a 1-2. If that's a 1-2 instead of an AB, what does that mean? If it's AB, we should come down somewhere around that green box, 61.50 to as low as maybe this 60.89. This would be a typical area for a ABC wave to end, three-wave correction, and then we go bouncing out. If this is in fact a 1-2, then the three-wave down exceeds all of those targets and goes at least to a 1618. Where did this conversation come from? That came from our discussion last week on the dollar index. We said it just like that, talking about the dollar index, that we said typically during a three-wave correction, you should reverse somewhere around that 1/1272 area. And even below the cloud, I said, as long as this rally would fail in this zone and not go breaking at the 1618 or higher, where this thing would go up here, then that would have been a 1-2-3. But we expected an ABC, and we said during that period of time, if this is the ABC, remember this call last week when this came down and I said, expect this is going to bounce and go breaking out, right? Because the probability that this was the correction and the dollar was going to go breaking lower was extremely low. As this looked more five-wave, that looks more like the A. Then we had the B, and even it was pushing lower to the extreme. Well, Gary, it's at the 618 to 786 zone. What did I say? We're going to bounce and go higher, because if this is the A, we get a B, then we need to reverse C. What else did we have? We had that weekly hook and a cross that said the daily was going to cycle up, and it didn't quite finish the cycle at this point when it was coming back down. And I said, expect it's going to reverse and finish the cycle. Well, what did it do? It did exactly that, right? When we were over here during that pull-up, and I said, expect, I even drew the Picasso. Look for this to go from a slingshot down to a slingshot up, so that the PAI could finish the cycle, the trend momentum could finish the cycle. And why did we feel so confident? We had that weekly hook and a cross. Weekly hook, weekly cross, we got slope, we got angle separation. And what does a weekly PAI hook and a trend momentum cross equal? A daily cycle. So right here, when price action started to rally, well, you got trigger higher, we were oversold, we were going up. But as this started to pull down into that 618786 retracement zone, I said, expect that this is going to go from a slingshot down to slingshot up. Why? Because this didn't look five waves. That had to be the A. This was the B. And the daily did not finish a cycle. Red and blue made it. Trend momentum came close. But money flow, the green line, which is very important, did not. And that's why I said I trust the gauges. And I expect this is going to go from a slingshot down to slingshot up, so that what? red, blue, and green could finish its cycle, and trend momentum could finish its cycle, and that beautiful move. Then we triggered lower, sold this, made some nice pips, got to my take profit one, sitting there right at almost to hit take profit two, and I'm looking for more downside. So I'm in a position of authority, expecting this to continue lower. Once we take out the swing point low, prior low, that really sets up, we're going to make a new swing point low here, and we have those targets we've been showing you on this charting platform, and that would be, once we take out this swing point low, what are we targeting? 95.80, 95.30 area. And this ABC looks beautiful proportions, that the bias is this rally is going to fizzle, it's going to break down. And if you're a little more conservative and you want to say, well, this could still be bullish, yeah, anything's possible. But once we start taking out this little green box, it states 75%, we're going to go to 96.60, 70 plus, we're going to go to 96.25. And guess what? That's a new swing point low. And if you use this swing point low, Mr. Tucson, up to the high, you take out the 97, which this would do it. You start targeting 75%, we're going to 95.80. 70 plus, we're going to 95.30. So again, reiterate, you're making a new swing point low. Fair enough? Well, with August being bearish, I expect to see more downside based on this technical picture. And this is exactly what our markets are showing. We're traced into the resistance zone, getting rejected, and we're seeing the same thing on these. So was this a great call, setting that pip on the daily reversal? 200 pips, got the position of authority on that, Mr. Tucson, Emil, James, Ian. Just like we discussed, I said, before you even take the trade, set the pip, trade management system to enter the trade for you, and then get to a position of authority, and then let it go. If it breaks down, pips us out for more profit, great. If it continues higher, like we're expecting more so than lower, then that's fine too. Continuation of the up move. So this is critical, that both the euro and the pound did exactly what we wanted, and we went right toward that 200 pip zone. We got the triggers higher. Here's the euro dollar. We got our green trigger higher. 200 pip run when the PAI hook entered for you. Boom, there we go. And then even the pound dollar got the same thing, got the PAI hook, got the trigger, went up, and now we're in a position of authority. So Mr. Tucson, sometimes trading is difficult, but when you understand price movement, support and resistance, and Fibonacci key levels, it's not so difficult. Got to have the MPA PE5 version 5.0 software, but the reason this isn't running is my Windsor went and kaput. It expired, so I had to open a new one, and that's why it's not in this one. It was in my old account, and this is the new account. So that's why I tell you, keep trades running in these. It makes it last a lot longer. But typically after you get an update, they typically will start to expire. So I've had some of these run for a long time where there weren't many updates, and it just never had to renew it for like a year plus. And then sometimes you got to renew it no sooner than 30 days. But a lot of times you get a lot more out of it than that when you place trades in it. But these would have triggered beautifully. They did in the other account, as my dollar index triggered to the downside, these triggered to the upside. Just like we were discussing days and days in advance. I even told you during this bounce, I'd be careful with this. I'm expecting another push lower. Then I said, look to buy here, get to a position of authority. Now, Emil, is this a guarantee that we're going to go breaking out? Not a guarantee, but it's a higher probability we're going to grind higher than we're going to grind lower. But it doesn't matter. You're in a position of authority, and if it goes lower, it pips you out for more profit. Otherwise, it could continue to go higher and make more profit. And that's how I like to be in trades, position of authority, so that if I already made money and if it continues higher, I'll make more. If it doesn't and goes lower, I'll still make some more. So it's a win-win situation once you're in a position of authority. Fair enough? All right, next up, we started talking about ES and the markets. Well, last week we said expect the markets to correct. On Thursday, what did it do? It went down on Thursday, actually rallied early, and then before the day was over, went down. Friday had a big push. So is this the end of the correction? Well, when you zoom in, Harold, Ian, James, Mr. Tucson, Emil, when you zoom in on this latest move, where did it rally to? Right into the 618 retracement zone. This does not look three wave. It's possible, yes, but this does not look three wave. Even if you come to a lower time frame and you look at that move, that looks pretty impulsive. That does not look like a three wave correction and we're ready to go breaking out. So if this is a 1, 2, 3, 4, 5, then that should be just like we talked about the dollar index in advance, that this looks very similar to an A wave. Right? That does not look three wave to then warrant a breakout just yet. And it looks more like an A wave. And then where did we rally to? We rallied right into the area we would expect to be rejected from, B wave. So what's next? Well, then you get your proportions. High, low, lower, high, and you would expect this rejection to continue down in a C wave. And looking at the three wave tool, this 3.2 right there by Fibonacci extensions, from the high to the lower high, we would expect the what? And I can use even just drawing arrows from this all-time high down to this recent swing point low. There's my arrow. And in order to get equality, that's what typically an A, B, the C wave equals the A wave frequently. You get that equivalency. And where should you go? See that one? Right there? Right at it. Emil, you can't make this stuff up, my friend. So highest of highest probability, look, you're already up 10 points if you went short on ES when I first started talking about it. Expect this is going to go lower. And here's your original target, probably 61.50. If this is the ABC, and that's something more dastardly to the downside, then we would expect this decline to stop somewhere in this 61.50, maybe as low as 60.89. And this would be the reversal point for us to go breaking all-time highs again, right? That's the ABC. But what happens if this decline continues and we go below 6,000, 6,011 and below, then this looks more like a 1-2 in the wave 3. Remember, wave 3s go at least to a 1,618 or more, where A, B, C's typically stop at the equal distant, which would be this one right here, 61.50, or you can go to 1,448 or 1,272. Typically, you do not see a A, B, C that goes the 1,618 or beyond. That's more characteristics of a 1-2 going down in 3 as opposed to an AB going down in C. If that means and confuses you, just stay and watch the class and archives, join us, and you'll see why this is so important that you understand price action along with the software. But we told you last week we're expecting a correction, and this bounce right into a rejection zone is stating we're likely going to get an equal and opposite move like this first down leg, B correction, C. So I would expect this, and not necessarily today, right? You're talking over 150 points to get down to 61.50. But since we have the decline in August, I would expect this to grind lower in the coming days. And if we do see this decline continue day after day after day after day, and this is a 4 hour right here, but if we see that decline continue for multiple more days and we start pushing toward the magic Fibo, then this is probably going to be a much deeper retracement. This would be my 1. This is my 2. Wave 3, if it is wave 3, would come at least toward this 1618 or more. So we could even come all the way down to magic Fibo, bounce off of that. Then what this level is here where the 1 bottoms, your wave 4 correction should not go into that area. And if we do get a bigger retracement, still staying below the swing point here, then we'd expect one more push lower. And this could be a much bigger decline. And we could push maybe to this 55, 57 minimum, maybe 55 area, get a much bigger correction. All right. So Emil will know in the coming days, do we stop in this zone to reverse? Or do we rip lower, reverse to make another lower high, and then another lower low? So that'll give us big insight. Is this a 1, 2, 3 that we're working on? Or is this the ABC we're working on? But both roads, 1, 2 going down in 3, or AB going down in C, what do they have in common? We're going down. Down goes Frazier. Down goes Frazier. Down goes Frazier. So if I'm wrong, then we start breaking above this pink box right there. If price rallies and start closing above this zone, then by all means, it's a high probability we go long. And from this 62.30, give it a little wiggle room, 62.25, we start closing above that. Then we have a 75% chance we go into 65. So that is like 70 points, 75 points. I know a lot of people die and go to heaven on a point or two. And you're already up about 15 points from when we started talking about this beginning of class, that we're likely going down. Highest of highest probability, look for us to go lower. And again, we don't have to be down here by today. This thing could take days, but where it stops to start reversing will give us insight. Is that the ABC? If it reverses in this green box, that's a higher probability. If it explodes below the green box, then it's more likely a 1, 2, and that's the 3 coming down. And then we would expect a 4 to stay below this low of this. If this is my wave 1, right, from that high, this is the 1, and this correction here is the 2, then price action should at least come down to a 1618 or further to be the 3, right? And then when you get a wave 4 correction, we're not allowed to go into the area of wave 1 up here. So my wave 4 would have to stop and not exceed this swing point. And if we see that, then there's another nice push lower. And whatever this low is, we're likely going to get another lower low. And then if it sets up where, Emil, what happens if we get a wave 5 down, and then we get a 3-wave correction, and we do from the high to the low a 618 retracement on that 3-wave, that would set up even a bigger move lower, and maybe we have a downward direction for the entire month. I don't mean each day, but overall, with the seasonality being down in August, we could get a 5-wave, 3-wave correction and another big move. Whoops. And that would be a much bigger. I didn't mean to click that. Let me clean that up. Go back over here to my chart. And that would be a much bigger move lower throughout August. So let's see where this decline stops and reverses from. And if it goes breaking above this resistance zone, then by all means, we know what our higher targets are. That's 65. I'll stretch that back out. That's 65.01, 65.30. But all roads A, B going down in C, 1, 2 going down in 3, all roads lead to lower lows. We're talking in excess about another 150 points minimum. So I'm looking more bearish with the seasonality in August to be bearish. I'm expecting price pattern is bearish. So all roads are leading to more downside. And when you throw in the software, it's certainly not in disagreement with that scenario. The daily's turning over, steep slope angle separation. So that looks like we're pushing lower. My weekly is working on it. Lo and behold, Mr. Tucson, looking here. We got a hook. We're just about to get the cross. What happens when you get a hook and a cross? Slope angle separation. This daily is going to cycle down. And this is what I'm talking about. This takes about 2 to 5 weeks. We've been in it a few days. So 2 to 5 weeks to cycle down. That would be more what we're looking for. A little 3-wave maybe. We get a daily down. We go up, we slingshot lower. And if it turns out it is the 5-wave, 3-wave correction, another push lower, that'll be a much bigger ABC. And this daily will get oversold by the time we start going into September. And we look for the run, maybe September, October, November type of thing, Santa Claus rally, and we go breaking all-time highs for that blow off top. But this is not real bullish. So I'll definitely be shorting the ES and the S&P 500, SPX, however you trade it, more than I'd be buying it. And this is beautiful after the retracement right to the 618. That's what we're showing here. Perfect lineup to go lower. SPX is basically the same. You can do the same on this move. You see how I'm doing it. You take from the recent high to the recent low. And what did we talk about as this was going in Thursday's class? I said, I'm looking for a correction. Expect the markets to correct. Even as it started to push up, what did it? Some of the Mag 7, Microsoft, and Metas blew out expectations. So we got a bit of a rally early in the day. And then what happened? Big reversal. So even when I was talking about we're looking for correction, we're getting to the end of the bullish July. We're going into the bearish August, and price did not disappoint. But you look at this recent high to the recent low, and lo and behold, where are we reversing? Right in the zone, 618786 zone, and we're reversing right in that area. So when you look at this, 0.5, 50% retracement, 61.8 retracement, 78.6 retracement is the zone that you would expect if we're going to get another down move, we'd reverse in this box. So I'm going to go over here, turn that to pink, and rinse and repeat, just like we did on ES. SPX is the same. This, if that, and you go to like a 4-hour, this decline, look at the 4-hour, doesn't look very bullish. And of course, the reason I look at futures, notice ES, you got on a 4-hour, you don't have the gap down. It's continuation because it trades basically 23 hours a day, 6 days a week. It closes on Friday, opens on Sunday. And that's the big difference in ES. You don't have the closing like you do our normal stock market hours. So you don't have the gap down, you got more price action. Look at SPX. You got just a big gap down. See it? So I like to see all the price action I can get my hands on. But the same rule is here. From the high to the low, we went right to the rejection zone. We're getting rejected. This, no matter how you slice it, go to a 1-hour. This does not look 3-wave, looks more impulsive. That 4-hour is hard to see without the additional candles, but that looks more impulsive than a 3-wave correction. So what is that saying? This is likely the A. This is the B getting rejected in our zone. And if it's AB, we should go down in C. If it's a 1, 2. We should go further down in 3. So all roads are leading to what? A, B, down in C. Hint word, what's in common? Down. 1, 2, 3. Hint word, down. Excuse me. So how do we know some potential targets here? Since ES and SPX are a little bit different in price. Well, you use your 3-point tool. You go from that same high right there to this low, to this lower high. And where would expect this to go? So around this 6130, 6101, maybe 6075. So this is a support zone that if this is an ABC correction, we would expect it to stop in this green box. If it's the ABC type of correction. Got it? Right? If it's not, and it ends up being the 1, 2, and we're going down in 3, then this move lower should at least go to 6,000 or lower, and that would be my 1, 2, 3. Then this swing point low here around that 62 area, correction up in wave 4 would have to stay below that area for another push lower in 5. Now, what can play out over this entire month, since it's only the 5th of the month, we still have multiple weeks left, is that this could turn into a 5-wave down, and then we get a 3-wave correction, and then another 5-wave down, and that would ultimately lead us to a bigger A, B, C, and then we're, say, the end of the month-ish, or early September, we look for the big bullish run, blow off top. So the deeper we go, the more bullish I become. Fair enough? If I'm wrong and somehow this was a 3-wave correction, then we need to start closing above this pink box. And if we do, then we start targeting 64.50, 64.80. That's simple. So what's the long of it? We close above this. We're going up here. More than likely, this is part of that ABC. I think, in my humble opinion, we're ultimately going to grind lower over the next coming days. And I'm looking for more downside than I am upside. But if price proves otherwise and closes above this pink box, then by all means, we can start targeting 64.50, 64.80 on ES. And for SPX, just a little bit difference in the numbers. If we start closing above the pink box, we can start targeting 65, 65.30. But the bias is we're more likely going to go lower. Amen? All righty. There you have it. What about Russell? All of our markets are doing the exact same move, which is quite interesting. From the recent high, we kind of just chopped for a long time in this resistance zone, but from the recent high to the low, we went right to the same rejection zone, 618,786.5 to 618. So here's your rejection zone. Went right to it. Again, this needs to be pink, but I'll make it a little bit different shade so you can see it within the bigger rejection zone. So I'll make this one a little bit darker. How about that color? Yeah, that's a little dark. That'll work. Still see the difference. So from the recent high to low, this is my rejection zone. From the recent high to the tariff low, bigger picture, that's the big pink box here. That's my 618786 zone. And all we were able to do is grind up in here. So I've been saying that I'm expecting, to go back to the daily so you can see a little bit more price action. I'm expecting this to give us a big flush lower. And I made a statement. I don't do predictions because everybody and their brother does predictions. I leave predictions to the prophets. But my statement is before we break 6,000 on ES, we're going to break 4,000. Well, the statement on Russell is before we break 2,600, we're going to break 1,600. right? And IWM, before we break 260, we're going to break 160. We'll show you that in a second. But this is screaming more down. And if it does this bigger degree ABC, and here's from the recent high to low, and then we take the recent lower high to lower low, that would put us below 1600. Right? Everybody good? How about them apples? This is high probability. I'm still short. I have puts on IWM, expecting this thing to push lower in August, and it might not get down this low by August. But what's probably going to end up playing out on this guy is we'll push lower in August, maybe another rally in toward the end of the year as the ES goes on all-time highs, NASDAQ all-time highs, probably even the Dow Jones all-time high. And then this guy will rally back into the rejection zone and then a bigger push lower. So if I get some money on that action, and then we get this in toward the end of the year, and then we look for the Elizabeth, I'm coming to join you, honey, the much bigger move going into next year, then I'll buy put spread way out into 2027, give it plenty of time to make that push, especially if this push doesn't get below 1600. We rally back up into the 2000, 22, whatever hundred, and then we push this out to 2027 where we will go below. So the statement is before we break 2600, we're breaking 1600, and pay me now, pay me later. The higher it goes, the more I look for selling. And for right now, I'm looking for a push lower going in through August. That's why I have puts out into September. Got it? All righty. So IWM, kind of ditto. Stretch this out, give you a big view of what we're looking at. Again, the bigger picture from the recent high to the low, all we were able to muster was a 618786 danger zone retracement. See, I got it written there. Danger zone, danger zone. Got it? So the big picture is much further down. So statement on this one, before we break 260, we're going to break 160 on IWM. And when this rallied into the danger zone, I did a put spread. And then as this pushed lower and then bounced again, I then closed my portion I sold for credit and took the most of the profits, the overwhelming majority of profits, about 90% of the profit. And then I only left with puts going out to September. So I'm expecting this push lower through August, tying in with seasonality, tying in with the technical picture that we should see more downside. So Mr. Tucson and others, even from the high to low, we went to 618786. What does that say? We're more likely going to get a big push lower. Now you look at the latest price action. Come up here to what's currently happening right now, and I'll zoom that in real big, pull that back over here, and from the recent high to low, we're doing the same thing. We're barely able to get into the 618786 retracement zone, and that is looking good. So again, I'll put another box up here. Here's the danger zone within a danger zone, right? We're right in it now. So this is why I'm looking for this larger picture rejection, smaller picture rejection, and we would expect this to go lower. If I'm wrong, we clear this darker pink box, then I'd start targeting 228, maybe 230. Amen? Otherwise, I'm looking for more downside, and with seasonality for August being down, software saying down, technical picture saying down, and if this is just simply a smaller little ABC correction, this looks more like a 5-wave than it does a 3-wave. So this is likely the A. And all markets are in the same tune. ES, NASDAQ, we'll go over in a second. Russell, this looks like the B wave. And we should get equal and opposite move in the C wave. So there's two ways to do it. You can use your 3-point tool from the recent high to the low, to the lower high, Would expect this to go somewhere around 207, 205, maybe 203. If this is going to be a ABC correction and not a 1, 2, 3 bigger move lower, then you would expect that this green box should hold price action. So being the A, B, C, would expect to go about to 207 or maybe as low as 203. If this is 1, 2, then this should go at least to 198 or lower to be the 1, 2, 3. Got it? That's just Fibonacci extension relationship and what 1, 2, 3 waves, impulsive waves versus corrective waves. ABCs typically go to equal distance slash 1448, 1272 and reverse out of there. If it's a 1, 2, 3, then how do I know it's a B going down in C or a 2 going down in 3? If you extend beyond the 1618 or more, then it's the highest of highest probability. It's not an ABC. It is a 1, 2, 3, which would then leave us with what? If this is a 1, 2, we do get down to this 198 or lower being 3, you get a wave 4 correction. A couple of things you want to look for. That swing point low on the wave 4 correction should not go into that area. Then you get your wave 5 down. And then it's a buying opportunity at that point, you betcha. And it could be just a 3-wave correction to set up another big 5-wave. So this is like the euro dollar and the pound dollar. When we buy down here or we come into this zone and start bouncing, we buy in this zone, we still want to be in aggressive manner to get to a position of authority. Because even though it stops in this area and starts retracing, it still could give you another push lower, right? It doesn't mean if we reverse here, we're absolutely going to go breaking out, because even if it is the case, what type of behavior? From the high to the low, you get a 618 type of retracement off of that. Even if this is starting to set up a breakout, you typically go to a 618, 786 type of retracement off of that move, and then you get a little push back, and that would be from the low to that high. You get a 618 area holds, and then that's bullish to start a reversal of a 1, 2, 3, etc. going the way up. So all you need is the MPAP 5 version 5.0 software and your Fibonacci extension relations along with our Magic Fibo. Look at that on the daily chart, went right to our Magic Fibo line. That's part of the software as well. So in my humble opinion, I would not be buying IWM to go long here. I'm actually short here. Got it? And I expect this to go at least down to 207, maybe 203. And if it turns out it's not an ABC, it's a 1, 2, 3, then we have to see this push. And it doesn't mean every day has to be a red candle, just this grinding lower. We need to see a push lower, at least to 198 or more to warrant the wave 3. And if it looks like it's a 1, 2, 3 because of how far the down move went, then when wave 4 comes up, you would expect it to stay below that wave 1 low in this example. Amen. And what would that be? This wave 1 low you can see is about 212. So this zone would not be exceeded if this ends up being a 1, 2, 3. How do I know it's a 3? Because we go down to a 1618 or more. On the retracement back up, you shouldn't go into this area wave 1. And if this again is the beginning, and I'll draw this for you, if that's a 1 instead of a, which one is it? Nobody knows. And in fact, it doesn't matter if it's a 1 or an A at this point. This is either the B or a 2. Or, if I can put a little, that's hard to write, or, I'll make it bigger, a 2. Well, in the case of an A or 1 doesn't matter, the way B or 2 doesn't matter. So how do I know it's a 3 or a C? Well, if it's a C, it should reverse in this area, likely going to this 207 level, equal distance. Sometime it extends a little bit, but if it goes breaking lower and breaks below this level, 198 or lower, then it's very unlikely an ABC. It's more likely the 1, 2, 3. If I keep saying it enough and you hear it enough, you'll start to catch on what we're looking for. So the bias is down, seasonality is down, and what's the software say? Huh. What does our software say? Daily, Russell, daily or down, we're engaging up on this, but what else do we have? We have a weekly hooking and beginning to cross. So it's right at it, just like the other ones. This 4 hour is cycling back up during this correction. So maybe we get just a little something more, or maybe that's the end. But the bias is this looks 5 wave down. So that looks like the A. This looks like the B going up. So is this over? Maybe we get just a little bit more. But the higher we go, the more I want to sell this. And a daily is down. So I'm definitely looking for this to continue. And you see this is engaging upwards at the moment. That's okay, but it's about to fail. So if I draw the Picasso for you in the coming days, because August is what? Bearish for the markets. So I'm looking for this little red and blue to hook down, green money flow to hook down, trend momentum to continue, this to continue, this to push lower, and this lower high, lower low continue to play out. That's the plan. Amen? All righty, let's continue. Any questions on the markets? Well, then we said NASDAQ, it's basically the same. You know, we had the V-shaped recovery. Last week we said expect the markets to correct. We got a bounce on Monday, and where are we bouncing to, Emil? You already know the answer. So you come down here with a 2.2, you go up from this swing point high to this swing point low, and lo and behold, what do we got? 618, 786. Well, in actuality, it's the 786, 618 down to a 50% retracement, 0.5 to 618. Looks like I got two of them on there. Looks like it's duplicated. Yeah. So I already had it, but we're rejecting in the zone, which is the danger zone so far. So you put this on the chart. Let me make it a little bit darker. So you put this on the chart, and Emil, what if I'm wrong? We start closing above this pink box, and I'll shoot for 2400, maybe 2413, 136. If I'm right, then we should get rejected. We're going to go breaking below this swing point, and this looks impulsive, so that must be the A or the 1, and this is 2 or the B, so it doesn't matter if it's a B going down in C or a 2 going down in 3. What's the difference? If it's a 2 going down in 3, we're going to go further than if it's a B going down in C. But both say we're going down, right? So what do we use? 3-point tool. Or you can use your little arrow. If it's going to be equal measurement from this high down to that low, duplicate it from the recent lower high. So that should put us down here about 22.3 area. What does a 3-point tool do? The same thing. You go from that high, if I can get it exact, down to this low. Whoops. Down to that low to this lower high right there. And look at it. 22.3. Can't make this stuff up. So Mr. Tucson, what do we think about the NASDAQ? August, seasonality down. Current price action expecting a correction, and that does not look three waves on a daily. It's just two down candles. But even as you drill down 4 hour, that doesn't look three wave, does it? It looks like more like a 1, 2, 3, 4, 5. So that should be A. And this B is right into the rejection zone. And now we need C, which should at least come to this 22,322 area. It could extend a little bit to 22,122 area. So here is my support zone down here. This is where the NASDAQ, if it's going to be the end of an ABC correction and we're ready to go reversing to go breaking out, then we should reverse in this green box to be my ABC, right? So we put a little C over here, designating, well, that's kind of a crazy looking C, but a little tilted, but it's there. And if we go ripping lower to 21.6 or lower, then this looks more like the 1, 2, 3 scenario. And remember the rule, if it ends up coming way down here at 21.6 or lower, we start reversing back up, then based where that bottom of wave 1 is, we would expect a wave 4 to go no higher than that, to get rejected for another move lower in wave 5. And again, this could play out over the next few days, meaning we don't need to go through the month of August just to get down here. This might be a 5-wave down, get a 3-wave correction, and that would be a bigger A, B, C. And what if that happens? Well, you can anticipate just using the same 3.2. What if this ends down here and that's just the bigger degree A? We come down here somewhere in this, say, 20,500. And this would be the A, we get a B, and we get a C. We could go much lower. We'll see how that plays out. Maybe we go down to 18 area in this big support zone down here. Amen? Any questions? So, what are we looking for? We're looking for more downside. Hint, hint, hint. The bias is this will grind lower in the coming days. Everything about this latest move, this looks more impulsive, so this is still corrective, so we need another push lower. That's what as far as the price action's telling us. And then you do what? Go over and check out the software. How about Mr. NASDAQ? What's he look like? Look at that daily. That's bearish. Steep slope, angle separation. Look at our weekly. Hooking right at a cross. So this is pretty strong conviction. Weekly hook. We're waiting for the cross. We're right at it. Right at it. So all we need is what? A little more down action. A little bit more down action. Then we're going to get the weekly hook and a cross like we did here. Weekly hook, weekly cross. We had slope. We had angle separation. And what happens when a daily does that? Our weekly does that. What is the behavior of a daily? So you can see over here, it's kind of a thin line, but just for demonstration purposes. When we started to get the PAI hook, trend momentum cross, what did the daily do? Daily went to, who could have guessed, who could have thought, oversold territory. Even slingshot even lower than that. But it's still cycle down, cycle down. So the process is we expect this is likely, hint, 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 going to cycle down. This is going to cycle down. Price is going to get sucked and pulled into the cloud area. Amen? In the coming days. So in my humble opinion, any rally should be sold in the shorter term. Then when we finally get the correction over, maybe it's the end of the month, maybe it's toward the latter part, maybe it's early September, but whenever it's over and the PAI is hooking back up on that daily, I'm looking to buy that because I'm looking for NASDAQ to go bouncing, to go making all-time highs and that blow off top going into the end of the year. Seasonality switches out of August, September, October, November, toward the end of the year, starts getting very bullish. All right. And we'll even show you those seasonality charts tomorrow for your viewing pleasure. Amen. So look for lower highs, lower lows, and back to the charting platform. We're expecting this grind to go down toward 22.3, maybe 22,000 area. If it goes blowing past that through the month of August, and we see it start pushing down at 21.6 or more, then this is likely the 1, 2, 3. Then we get a 4 or 5. Then we could start talking about being bullish again. Amen. So no matter how we slice it, we get a big push lower in August. I'm looking to go long in September. Or we get a modest type of retracement going into September. I'm looking to go bullish either way. So the deeper we go, the more I salivate to go long into the end of the year. Late fall in the year type of thing. Any questions? All righty. Let's continue. For those that look at the Dow, there's too many influences of the Dow. It's heavily weighted by UNH, healthcare, so it kind of varies, but I still think it's going to follow suit. We went right to all-time highs again, didn't break out. Now we're sitting in the zone. So I still think we're going to get a blow off top by year end, or even the Dow will go on to make all-time highs before we're done. That's the plan. And what I use for that measure, I like the Nikkei. So well, that's Japan's market. Why you look at the Nikkei? I look at that as global liquidity. And we're kind of trying to break out of this breakout zone. And if we can start pushing toward the 44, 45, 50, if we see this baby, it'll probably pull back because July is what? August is bearish. So we're looking for maybe from that low to that high, like a 618 type of retracement. So let me clean this chart up for you and kind of give you some targets. So I'm going to remove these levels and remove, I guess I can leave that one. And we want to look for some sort of retracement from this low up to that high. You typically want to see somewhere a 618, 786 retracement, which is this green box. So I expect this is not going to go breaking out now. We're more likely going to push down into this 34.8, maybe 32 zone. Then we go toward the end of the year, the blow off top. But where I see this, once we get up into this 44 to 50,000 range, then it's going to push our markets for their blow off top. And that would be ES pushing up 6,600 or more. That would be NASDAQ pushing that 25 to 26,000. The Dow's pushing that 44 to 50,000 range, kind of similar. And the Russell, all it would be doing is pushing back to that danger zone about that 2,200, maybe 23-ish. And then we look for the big, Elizabeth, I'm coming to join you, honey, in 2026, where we get the big move down. And then we get the ES we talked about before we break 7, we're going to break 4. And with the Russell, before we break, 260 on IWM or 2,600 on the Russell, we're going to break 1,600. So all of those tie in with the big one. Got it? All righty. So any questions on this one? It's about global liquidity. I don't trade this per se. I just look at it as my global liquidity. And if this pops into this blow off top, then expect our ES, and I'll just go back to here. ES should be up here at our 6,600 zone, which if I expand that view, let me go back to daily so I can see some separation in here. It's some extensions like that 6,600, NASDAQ, 24, 25, maybe as high as 26. We'll see how that plays out. But we're looking at least 24 to 25 is kind of the sweet spot. Maybe we blow off a little bit more, but I'm looking for this, either bigger or modest, then at least back to here, if not more 25, 26. Blow off top zone. That's what this big box has been representing. And this circle within the box is kind of my sweet spot, looking at that 25 to 26,000 zone. And then again, Russell, we're expecting at best, after the push lower, whether it's deeper or not, we're looking just to get back into this resistance zone. So when the Dow and everybody goes to blow off tops and the Nikkei goes up to that 45 to 50,000 range, global liquidity, it pushes the S&P toward that 6,600. It pushes the NASDAQ into that 24 to 26,000. The Dow probably toward that 44 to 50,000 range. And this guy will only come back into the danger zone somewhere between that 230 to 220 area, somewhere like that. So we come down, we come back up, and then we get the big one going in the next year. And again, the bias is before we break 260, we're going to break 160 on this IWM. What about black gold Texas T? Dan, how about that call? Whew. How about that, my friends? You think this ABC's got some kind of logic to it? Do you? Do you? Do you? From that high to that low, went right into the danger zone, and more bearish than bullish. We're back below the Magic Fibo, and we're pushing lower. So once we start cratering below the support zone, and I did say, let me kind of condense this and bring this back up. Once we start closing below this support zone, then we should make a move where? Down to 50. So this is a beautiful move, and we expected the rejection. Now the question is, do we break this support zone that's right there, that big red line? We break that, then expect us to go testing that $60 target. We break 60, then we're likely going to 50. And if you want some incremental measurements, you look for 56 first, then 54, then 52, and my bias is 50. All right. When we went down to 55, I expected a bounce, and we kind of got to consolidate this. But when we did that little down here to 55, I expected a nice move. Now we got it. Now we're looking for the next move. And it is to lower high, lower low. We're still holding on that trend line. I drew this the other week. It's been there for years. Where does that come from? All the way back here in 2022. We've been getting lower highs, lower highs, lower highs, lower highs, lower highs. We tried a couple of times to break out on that. We failed. And I even illustrated this last week saying, you know about pattern recognition and pattern repeats, how patterns repeat? Well, we tried to break out here. We failed. We made a lower high, went to the trend line and failed. Well, this one we tried to break out again, similar to that one. Then we came down and we tried to break out. We failed. And that's why I'm looking. More than likely, this will continue down and make another new swing point low. Again, this is overlapping, chopping, grinding, grunting, laboring. So it still looks like we want to do another swing point low below that 55, which is screaming 50. But in the interim, this thing could just chop sideways. So maybe we come down here, find support, and we just keep chopping between support, resistance, support, resistance, support, resistance. But this looks eerily the same. Tried to break out, failed, came down, tried to retrace, failed, went to a new low. We tried to break out, failed, went to resistance, failed. So again, I want to see us break this red line, basically my 64 target. If we do 63 and change, 64, then I expect we're going to go test 60. So can we short it down from here? Well, yeah, you can be short now in position of authority and let it continue to run. But if we break the support zone at that 64 area, 63 and change, 64, then the probability you go testing 60 down here, like over here, we tested, broke down, we tested it, broke down. So we break it, likely going to 60, we break 60, then we're going to start targeting 56, 53, 52, and basically my 50 target. Maybe we get down to 47, but I'm really looking for 50. All right. So, Dan, be in a position of authority. I don't think this is going to bounce to go breaking out. I do think it's going to break down further. And this is all overlapping, chopping, grinding. So, since this pullback, this does not look bullish, right? You look at if that's a 1-2, a very deep wave or 2, that could be fine. But what's the rest? Is that 3, 4? Where is it? And if that's 1, 2, 3, then this is wave 4. That's why this zone is so important, because you start overlapping that, and that doesn't look like a pretty wave 3, does it? 1, 2, 3. And if this is 4 correction, we go into the area of wave 1. That's why this red line breaks. We're going down. Then it's overlapping, and then all this overlapping consistently states the same thing. We're going to make a new swing point low. Remember our conversation from months ago when we had this big correction? We looked bullish for a while, looked very good. Then we got, if that's a 1, 2, 3, 4 overlapping, and we continue this overlapping, I kept saying we're due for this May 23rd low. We need a new swing point low before we can clean this up, right? And all this overlapping, chopping action finally led to what? Lower highs, and then boom, we got the lower low. Well, look at this behavior, and then look at, since we made this new 55 low, look at this behavior. It's somewhat similar. We're getting lower highs, and it's overlapping, chopping. So rinse and repeat, Emil. We might need another swing point low to clean this up, and that's where my 50 target comes in. Make a new swing point low to then clean the target. What happens if gold does that? Black gold, Texas T, we go down to 50 or lower. Then I'm looking to buy for another bounce. Amen? So zoom that in and look at this behavior. Harold, this looks very similar than back in May 23, and we had that, and I kept saying an overlapping, chopping axis said we need a new swing point low below that 62. We went to 55, and since this low, I'll go back and review that for you, but it looks very similar. I'll leave it all bright and pushed here. Let me kind of move that over so I can get to it. So this swing point low right there, that one right there. Since we thought that was the end, I said we need a new swing point low below this. Why? Because when we reached that, we did all this overlapping, chopping, grinding, grunting, laboring action. And I kept saying, we need a new swing point low below this 63 or whatever it was, and to clean this up. So eventually what happened? We got it. Now look at this from this low, overlapping, chopping. What is this? A 1, 2, 3, 4, 5. Looks kind of iffy. And then look at this, and then lower high, then higher low, then lower high, overlapping, chopping, grinding, grunting, laboring. That meant we needed what? A new swing point low. We got it. Now zoom in at this action. Since we got that swing point low, it looks very similar. Kind of grinding, grunting, overlapping, lower highs, higher lows, lower highs, still looking ugly. So again, this is kind of screaming, Emil. The same chopping, overlapping, grinding, grunting, laboring action Looks very similar to what happened before when we got a new swing point low. So this is likely setting up for another swing point low. But we called for, if this is just the A, the B, and the C, then we're likely should come down toward 56. So I would expect that if we break this 64 area, we're going to go down and test 60. We break that, then it opens the door for 56, 53, 95, 54, 52, then 50. So that would give us what? That new swing point low below 55. And then we could look to go bullish again after that. All right. But be careful. I would not just be loading the boat short on this. We talked about this last week, and we said as this is declining, there are ways to play this, many different ways. Trade futures. Look at UCO. We talked about that. At UCO, ultra crude oil, is potentially one way to play it. And many different ways to play this, but trade futures, however you want to trade it. But I did call, going back to CL, that we're likely going to get rejected up here, and we're likely going to get another push lower. Because this looks very impulsive down, three-wave correction, so we need another impulsive move down. Amen? So in closing, we're stuck between support and resistance. I still say, if I'm wrong, which is possible, has happened before, but not often, right? That's read and interpret, God-given talent to read and interpret price. No, I don't want that. I want my arrow. So let me fix that again. Go here. This is what I want. That, this, close that, take this. Now I want my arrow. If we break above this resistance zone, then I want to go long. We break below the support zone, I want to go short. And in the interim, we talked about this last week, this was likely going to get rejected here and push lower. Amen? So this is looking good for more downside. We break this red line, that former battle zone. Support, turn resistance, turn support, turn resistance. This battle zone, we support here, support, resistance, 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 broke down, additional resistance. So this is a battle zone. You go further to the right. So I'll take all those lines off and we go further over here. We can see it's support, support, turned, resistance, resistance, then back to support. So we start breaking back below, then that's why we should start make a move to 60. So you see black gold Texas T close below 64, 63 and change. Then it's likely pushing at least to 60. We break 60. Then I think it's setting the tone to go to 56, 53, 52. And the more we see this type of movement, the more we need a new swing point low below that 55. And that's where my 50 target comes in. Fair enough? All right. Let's continue. Gold. Could it be that gold's going to go breaking out? Maybe, but I'd still be real cautious that we're kind of that trend line, what gold, black gold Texas T just did. This is still overlapping, chopping. I mean, it's possible that this thing could go breaking out, but I'm not so convinced. This looks more like the original three-wave overlapping chopping. We need a new swing point low. We've just been chopping with higher lows, lower highs. So I'm still looking for what? More downside than upside. So if you want that bounce, I'd definitely be in a position of authority. The only way I'd be buying gold at this price is if I'm holding it for the long term when gold makes its next big surge to 5,000. But I still think we need more downside before it's done. This hasn't changed. I'm still targeting 3,000 to 2,800 until price proves otherwise. And right now it's not proving otherwise. It's grinding. But this is what we expected. See my lines? This is what we expected. Didn't quite get those exact. I mean, it's hard to say exactly what day is it going to finish bottoming, what day is it going to start to go back up. But this is kind of the scenario we were looking for. And we're looking for when it finally finishes, push lower. And this could be the 1, 2, 3, 4, 5. And that would push us down towards this 2,800. It's kind of my sweet spot. So let's rinse and repeat this, because recent high to lower high, that puts us at that target zone. So what if we use a 3-point tool and you go from the all-time high to this recent low to this corrective high, which is still over here? That still puts us somewhere around that 2,800. It's the sweet spot, but at least 3,000. See it? Can't make this stuff up. So I am not real bullish right now on gold. Long term, 5,000, in my humble opinion, is a given. It will get there and then some. But the corrective action kind of screaming we need another swing point low. Since this low, what do we have? Overlapping, chopping, grinding, grunting action. Now, does it mean of 1,000 of these that set up, all 1,000 continue to break down further to a new low? I wouldn't say 1,000 out of 1,000, but it's a much higher percentage that this will not go breaking out now, and it will go breaking to a new low. That's kind of the plan. And nothing's changed. And if this turns out it is the 1, 2, and we start to get a quick move lower, then Emil, you can expand this arrow and blow it up so everybody can see it real good to its massive candles, and stretch that out so I can get that in, not quite that big, but I need to be able to operate in here. But if this is the high to the low, and use a 3-point tool from this high to this low to this lower high, which is still in the what? 618786 zone. See it? We're right in that zone. So this is the resistance zone. Actually, I need to use this one. This is my resistance zone that we're into right now. So this is danger zone. Again, this is why I would not be buying if I'm short-term trading gold, unless I'm scalping or something. But shorter term trading, I'm not looking to go long here. I'm looking for a pullback to go long later. But this is resistance zone, danger zone. And we're likely going to maybe rally up to this trend line and then fizzle. But if this is the high, the low, and we look for the lower high, then it starts to target 32, 31.99, and 31.77. If this is what we believe it is, Emil, A, B, C, then we should stop somewhere around here. If this is the 1, 2, 3, 4, 5, then notice we have to come down at least to the Magic Fibo or lower. And this is looking like the A, the B. So I'll mark those for you. If this is the A, this is the B, right there. If that's the case, then we come down in C, should put us somewhere in that 3,200 range. If it's 1, 2, and we're going down in 3, which I truly believe is more the case, then we need to see a decline down to 31 area and lower to warrant wave 3 down here, then a 4 correction that can't go into this area wave 1, and then a push lower, and that's where this extension down here comes into my, let me go back to a bigger time frame or bring more price action in here, down to my 2,800. From that high to that low to that lower high, 2,800. Got it? So that's kind of the plan. 1, 2, 3, 4, 5, get us down here. we start rejecting and reversing, then we should at least come to 3,200 area. But bigger picture, this is a lot of chopping, overlapping. If this is the three-wave correction, we're ready to go blasting off, then where's the bullish movement? Is this a series of 1, 2, 1, 2, 1, 2, 1, 2? Maybe. But 1, 2 here, we got a higher low there, got a higher low there. It's possible. We got a 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, 5. It's possible, but unlikely. If I'm wrong, then we start breaking the swing point high up here. Expect we're going to go to new highs. Any questions on that? So we need to break that swing point high off of the correction, this one up here. So we need to basically get about 3,500. We do that, then I'll start targeting 3,650, 3,700. In the interim, all of this overlapping chopping action is screaming more downside. So I'd be very careful if you're buying that bounce, which, I mean, on the software, you could have certainly bought that bounce. Check out Black Gold Texas T. Let me come down here, get to my arrow, my Black Gold Texas T, and we have a weekly. Now that's black gold. That's why I think it's more down. Look at that. Look at my daily, big slingshot lower, my weekly aiming down. So yeah, I'm more bearish on that one, but gold, this gold, yellow gold, is this one. And my weekly is just trying to chopping, engage, disengage, engage, disengage. My daily did reverse, had a little trigger higher, but already we got the daily hook, cross, slope, angle separation. Why would I say be taking profits now? Look at the 4 hour. It's already in overbought territory. So be careful. Yes, this could go a little higher, but from the recent high to low, we're right at that 618,786 retracement zone. So that's why I keep showing you on this chart. We're right in that zone, Harold. More chopping, overlapping, and every time it looks like we were going breaking out, what happened? Boom. What happened? Boom. What happened? Boom. So be careful. Amen? All righty. If I'm wrong, we go taking this swing point high up here, which is another $100, 50, not about 60 something dollars. We go ripping above that, then by all means, I'll start targeting up here, 34.64, 34.80, 35.40, 36, 37. But my humble opinion, I don't think we're ready for this yet. I think we're ready for more of that. Okay? All righty. What about silver? Silver still, again, I think that's part of a correction. And this was a very bullish move up. Kind of warned you about needing a correction. Well, to me, I don't see three waves in this. Definitely doesn't look three-way. It looks more impulsive. So if this is the A and this is the B, likely going to get another push lower C. I'm extremely bullish SLV and silver for the long haul. But for the short term, I'd be in a position of authority if I'm buying this bounce and just day trading it or short time trading. Then I'd be sure to be in a position of authority because I'm looking for a lower high, lower low. Then I am a new high. Fair enough. And what is SLV doing just like the others? Rallying right into the danger zone. And this one quite hadn't even reached it yet. It's getting close. But here's the danger zone within the danger zone for us to push lower. And Emil, what would be my short-term targets? Well, you use the swing point high, the swing point low, and maybe we go just a little bit higher. But let's just say where we are from there. We'd start targeting 3180, 3140, 3109. And if this ends up being like gold, a 5-wave move, then we should at least get to 30 to then bounce and move back towards 33, but not crossing it to give us the last fifth wave down. So maybe we get to this big green box down here, somewhere around that 28-ish target. We shall see. So if this is the A, the B, and we're working on C, then we should come somewhere in this area. All right, 3180 down about 3109, basically the Magic Fibo line. All right, if this is A, B, C, then we should come near this Magic Fibo line, which is increasing. And here's your number, 3180 to 3109, somewhere in that zone. If this baby does the 1, 1, 2 going down in 3, then we don't stop here. We exceed and go down to $30 or lower to then look for 4 or 5. And then once that's over, Harold, we're going to look to go long, which we're still long now for the long haul. But that's kind of the plan, lower high, lower low. Then we can get a better buying opportunity. And why do I want to be long SLV? Because it's going to $60/$70 guaranteed. But there are no guarantees, correct? But the price action is screaming 60, 70 is a gimme. Everybody know what a gimme is in golf world? Where you take from the cup and you extend your putter out to where the leather part starts. If the ball's within that range, they call that a gimme zone, and just your normal pickup. And the pros, they have to putt it no matter where it is. Even on the side of the lip, they got to put it in. But recreational, you call that a gimme? Well, this is my gimme right there. How long is it going to take to get there? That's the tough part. Will it be 26? I don't think it'll be 25. I think it'll probably be more like 26 before we get there, but I still think we're going there. And if silver catches up with gold, so where gold gave us this 1900 correction down to 1000, go to the archives. I made that bold statement, wasn't a prediction, but I said when we reach this 1900, we were due to go back to 1000 or lower before we reversed to go to 3000. We went to 1000 and change, and then we went to 3000 and above. So my next one after this correction, we're going where? Like this correction went to 3000. The next correction, we're going to end up going to 5,000. And yes, it could take years to get that far, but that's the plan. So look where gold went from the recent high to low. We exceeded the 2618 extension. Interesting. Look at silver in the same boat. We're not even at toward extensions. But if silver were to run to the 2618, that'd put us up over $100. Now you can see why my $50 to $60 to $70, $60/$70 range, in my humble opinion, is a gimme. SLV is even more absurd with this. Let's see if I can adjust this algorithmic. Let me see if it makes a difference. Yeah, that's more like it. But still 5. And then what about this one? Logarithmic. Okay. So look at how absurd this one is. If we start doing the 2618, you're pushing into the 100 plus. So Harold, this is why when silver starts to catch up with gold, we should already be in this zone. Already, right? Already should be in that zone because gold has done it. Silver's lagging, but when it catches up. Now, if we're talking above 100, then why do you think my $60, $70 is a gimme and why it's a conservative target? Interesting, isn't it? Conservative target. And if you toggle between this and you go back to logarithmic, we're talking, oh, that one. Is it that one? It was up toward, it was 500 a minute ago. Let me see if I can stretch that out. Yeah, up towards 500. See the 2618 there? Let me stretch that out for you. So I think it's going to be the conservative target, not the 500, but you see the point. If we go to 2618, it's up to 500 on that scale. I like the regular scale here to be more in tune with where I think we're going, not the 500, but the 100 plus. And I got to click that bag, keeps jumping between the two, not the 500. Come on, get out of there. Oh, well, regular, see what regular shows. 2618, the 100. Yep, regular scale, not logarithmic. Got it? Any question? So in closing, the idea is to be long SLV, whether you go to Costco and buy silver bars or you buy some shares. The bias is we're going to 60, we're going to 70. Would not be surprised to see us reach it in 2026. Could be more, yes. Could we get up here? If silver starts catching up with gold, then we could be in the 100 zone. So 60, 70 is conservative, but I definitely think a gimme is that we're going to reach this target, and that's a double minimum from where we are. But come down to the current price action, and I do think we have a good chance we're going to go a little bit lower, even though we're rallying into our resistance zone, our danger zone. The bias is lower high, lower low before we just go breaking out. Either way, I'm in it to go to 60, 70. I'm looking for the correction to go lower so I can add to my position to shoot for my 60/70 target into next year. So when I buy shares, I don't have to worry about expiration, any of that. There is a little fee you pay for owning an ETF like this iShares Silver Trust, but it's far outweighed when we get to $60, $70 and you're buying in. And if you started the process back when we got this other correction we talked about down in 26, I thought we'd go to 25. We didn't quite reach it. We blew up. Now we're looking for a bigger retracement, deeper before the next big run. But over the coming months to year plus, moving into 26, I think we are going to go blasting off. And again, I got to go to a higher time frame to show you that bigger picture. What are we looking at? From the all-time high to the low, we're looking at a extension of this 127 618 71 and the 1272 basically 60. That's where my 60 70 target comes from. Amen. And that's why I think this is going to happen. No ifs, no buts, no ands, no exceptions. We're going there. Look for a bigger retracement, in my humble opinion, first. All that means is the lower we go, the more you can add. And what I love about stocks and ETFs, et cetera, iShares, these, you can buy for no commission. You don't pay a commission to buy one share at a time, 10 shares at a time. Where in the past, you had to pay commissions no matter what you were buying. Now you can buy one share, you can buy multiple shares and pay no commission. I like it. So the lower we go, the more we salivate. We get to 30-ish, 31, kind of where this Magic Fibo is, or lower. We go to 31 or lower, or even 38, 31.84 or lower. That's a good time to add to your position and hold it into 2026. Certainly, I think by 2026, there's a good chance to get up to that 60, 70 target. Amen? All right, let's finish up with Bitcoin. How about that call? Remember the call? I said expect the markets to correct last Thursday and Bitcoin to make a new low. What did our friend Bitcoin do when we were discussing that? Let's see. Did we make a new swing point low, Harold? This is going into last Friday, coming into this week, and we said we're likely going to make a new low. Not too shabby. Since we got that new low, when? Thursday going in, we're going to make a new low. It started on Thursday. We were way up here, and then the day closed down here, and then the Friday came in, Saturday, Friday, Saturday, we got the lower low, and that's why I kind of expected we needed a new swing point low below this. Here we were, kind of rallied up, and we said, look for this to go new low. We got it. Came down, Emil. Remember we talked about it would be nice to go down to 112. We got a low of 111,982. How about that? That's pretty cool. So I said it'd be ashamed if we didn't go down to 112. We got it. Now the question is this over, or do we still need another swing point low? Well, how do we do that? You blow this up, use your 2-point tool from the recent low up to the recent high. We want to see this zone, which it's struggling to hold right now. We want to see this zone hold. Let me put that as green because that's a support zone. We'd like to see this hold and then go bouncing. But if not, if we start closing below this green box, we already dipped below, but it's not the wick, it's the candle body. And if we close below this area, then we'll start targeting 111.4, 110.9 as a high probability. Maybe we do a blow off and go down to 110, 109 and change. But watch this closely. Now, if we go breaking above this swing point up here, then it opens the door to the recent high to low. We start getting some factors to the upside. And we'll start targeting 124, 126, maybe 130. So what's it going to do? I knew we needed a correction. I said the prior weeks we'd go down to 114 area. We bounced off of there. What's the problem? From the high to the low, we went into this resistance zone and we got rejected. So we got the low. Then coming into this week, when we got that 114 low, because we rallied and got rejected, that's why I came out end of last week. We need a new swing point low, a new one. We got it. Now, is this another rinse and repeat where we get just another swing point low? I'm really not liking this price action because we barely rallied up and we're already at the brink of breaking that 618,786 zone to the downside. So if we do, then expect new swing point lows, 111.4, 110.9, maybe 109.6. Amen. And what happens if we get our markets to push lower and we get a 5 wave out of this? It's a little deeper retracement. Well, if we can get down to the Magic Fibo on a daily, and again, this thing's sloping upwards. Right now it's between basically 103 and 104.6 area. You can see the black numbers. That's the high of the Magic Fibo and the low of the Magic Fibo. Man, if Bitcoin could pull down here, that is salivate by the dip for the next big surge. And it's possible that we get our correction in August, not only the markets, but Bitcoin as well. And if we start closing below this, then we look for some new lows. And this might be the beginning of a bigger correction that allows Bitcoin to continue this deeper correction down toward the Magic Fibo area. Then we look for the big bounce. So the lower Bitcoin goes, the more you salivate to buy. Why? Because by September, October / end of the year, we're expecting Bitcoin to be where? 150 to 175. Any questions? 150 to 175. That's what we're looking for. Period. End of story. Till price proves otherwise, that's where we're going. So this correction, these corrections are healthy after that big run from what? Below 20,000 in 2022 when we bottomed and reversed, and we talked about it. And we said this is a great buying opportunity going in the halving, that we'd get 12 to 18 months run. So go to the higher time frame, we can see every halving, Bitcoin has done the same thing. It looks flatline here, but you zoom in on this, there's some massive runs and big runs. So every low post halving, 12 to 18 month run, pull back winter low into the next halving, buy low. And we found out, right, Harold? You keep zooming this and it doesn't look like much, but you come down in here and you can see there was some massive moves in the early days of Bitcoin during those initial halvings. Look at that baby. Went from the $800 range all the way to 19,000 up there. Not too shabby. And this doesn't look like much during the original halving in 2012, but we got a big run for 12 to 18 months, winter low, big run 12 to 18 months, winter low, big run 12 to 18 months. And it just so happens every time we top out, we topped out in 17. We topped out over here in 13, 17. Guess when the next one was? 21. Guess when the ones that could be this year? 25. What are we in? 25. Then you get your crypto winter lows. We got low in 22. We got a low in 4 years before that was down here in 18. So we got the winter low before the halving in 18, winter low before the halving in 22. So we already know, rinse and repeat, we're going to buy in late 2026 Bitcoin, just like I told you back in 2022, that Bitcoin below 20,000 is a crime. It's a steal of a deal to be able to buy at that low. Even at 25 to 30,000, I said, man, this is an unbelievable deal. And we went up to 100 and whatever so far, and we're still going to 150, 175. My humble opinion, but that's where we're headed. So this nibble box, the Bitcoin, like it was down here, 20,000 and lower in 22. If Bitcoin can get to 50,000 or lower in 26, that, my friends, is another steal of a deal. You'll buy low in 26, wherever it is, and then we'll sell high in 29, next halving in 28, 12 to 18 months later, same rinse and repeat. Halving, 12 to 18 month peaks out, you get the crypto winter low into the next halving, you get the 12 to 18 months, crypto winter low into the next halving, 12 to 18 month run, crypto winter low should come in over here, and then we go before the next halving, then we do 12 to 18 months, 2028, putting us out to late 2029, rinse and repeat. So again, we topped out in 17, 21, 25, and the next one will be 29, and the one way back here was 13, 17, 21, 25, right? And we bottomed out in 12, way back over here, 12, no, it's 14, 18, 22, 26. So it's like every 4 years we bottom, every 4 years we top out post the halving. Amen. So if you participated in this, you're smiling. And when we come back down here in late 2026, we'll be buying and holding till 2029. Amen. And again, there's ways to trade Bitcoin if you don't worry about buying through a crypto exchange and wallets and where to put it and where to store it, blah, blah. Then you could trade ETFs like BITU, BITX. There's many ways to trade this. And I do think we're going up here to the 100 range, 80 plus hundreds, the plan. And we've been grinding, stair stepping. So next up, higher low, higher high. And I'm looking for that big push. So how do I know when I sell my BitX or BitU or any of these I have? When Bitcoin hits that 150, 175 towards September, October, toward the end of the year, and it's up there, whatever you hold in crypto, I'm unloading for my next opportunity to buy low. unless you just got so much money, you hold Bitcoin and you're just holding it till Bitcoin gets to $1 million. In my humble opinion, believe it or not, Bitcoin will reach $1 million. Is it this halving? No. Is it next halving? Probably not. Halving after that? Maybe. We'll see. But we keep doing these rinse and repeat type of moves every 4 year halving, and we keep getting new all-time highs, new all-time highs. And ratio wise, from the high to the low, we're looking at some extensions. So I'll be able to give you fine targets like I did this 150, 175 from 2022's low. We'll get a new low in 26, and then we'll talk about where the new extension is, but it'll be somewhere in the hundreds of thousands the next go around. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Quick circle the wagon. Be careful with the markets. I do think with August seasonality being bearish and our indicators, the price action, everything about this is stating we probably need more downside. So I'll go to the daily so we can see that. We're probably going to need some more downside. So as long as we stay below this green pink box, look for more downside. NASDAQ, as long as we stay below that pink box, more downside. Russell, as long as we stay below the pink box, more downside. And that's all typical in that move we discussed, whether it's A, B, C, or 1, 2, 3, etc. We know what to look for. This box for C, this 1618 extension or more for a 3, and that would set the tone. Do we get 5 down, 3-wave correction and a bigger move? Then that would give us a much bigger 3-wave correction through August. Either way, I'm looking for some bullish activity going into the end of the year where ES goes on to all-time highs. After the correction, we go into the end of the year. I'm looking for 6,600 zone. For NASDAQ, I'm looking for this 24 to 26,000 range. For Russell, I'm looking for just a repeat up to this 230, 220, 230, but I'm looking for this down move first, then blow off top for everybody else, and blow off top will be up to about 230, somewhere at 220 to 230, staying in the danger zone for the big one, and then we have it based on the same scenario. Amen? Again, black gold Texas T, looking for more downside. Based on that latest correction, we're likely to get more, but we are stuck between support and resistance. So when up here, I took profits, down here, take profit. And yes, we started breaking below this red line, which is my support and resistance swing point. Then it sets the tone. We go into 60, we break below 60, then we're going to 50. And of course, gold and silver, still think this rally is going to fizzle manizzle with another swing point low. Really looking for us to come back toward the Magic Fibo at least on gold and silver before the correction is over, if not a little bit deeper. Then this is a great salivate buying opportunity for your metals, gold and silver, after this pullback is finished. Amen? So with that, I'll say good luck. God bless you. We love and appreciate you. As we like to close, that's it. That's all. We'll see you tomorrow.